Welcome to this year's federal budget wrap-up. So we've been busy little bees over the last 24 hours going through all of the budget commentary and all of the budget papers after our amazing dough-heads-fueled budget party last night. Now, Alan, there really wasn't a lot in this budget for businesses or superannuation, was there?
No, there wasn't. We may as well have gone to sleep last night because all the major announcements that were made basically made last year and come into effect 1st of July this year.
And that's actually okay because there's certainly been a lot of things happening over the last couple of years for small businesses in the federal budget. A few disappointments, but maybe let's run through what's actually changing that is fantastic.
Yeah, well, why don't we start with the business? What's actually happening and what are the changes for small business?
So the first one is the tax rate reduction. So if you're a company, you're going to pay tax at 27.5 cents in the dollar. And that's actually from the 1st of July 2016, which means this is in effect right now. And it's fantastic to have a nice reduction in tax rate. The second thing, which is very exciting, is the instant asset write-off. So if you have an asset, so let's say you've gone to purchase a whole host of computers and it's less than $20,000, you can actually write that off in this year as opposed to having to write it off over 5 years or 10 years, whatever the effective life of an asset is. But one key component of that a lot of people don't understand, this is a tax deduction, which means you've got to be making profit first, i.e. you've got to be paying tax for it to be beneficial. And the second thing is you need to ensure that you actually have enough money, so enough cash to pay for the asset. Because remember, this deduction is only 27.5%, so you're only getting a tax deduction. We're not getting money back from the government for buying any of these assets either.
So you need the asset for starters and you need to be making profit to make it worthwhile.
Correct. Now, there are a couple of changes that aren't in effect right now. So from the 1st of July 2018, We've got more red tape coming in for cleaners and couriers. They're going to need to do a whole taxable payment report. I think I've got that right. More acronyms anyway, more reporting to the ATO on all of their contractors. So building and construction currently have to fill in this report every single year to report on their subcontractors. Couriers and cleaning will need to do that from 1 July 2018 as well. Good news if you're contracting to the government. Normally people are waiting 60 or 90 days to be paid, which is terrible. We all know cash is king for small businesses. So the government has mandated if your contract with them is less than $1 million, they're going to pay you within 15 days of you submitting your invoice.
That takes better.
It's really good. And the other probably thing to note is the threshold for small businesses has been changed. Was $2 million to qualify as a small business.
Yep.
That's now been increased to $10 million. So businesses who are on that cusp of just being able to change can still do simplified depreciation and a whole host of nice things. Terrible part though, CGT, small business concessions, have not been increased. So the threshold is still $2 million in turnover to access those, or alternatively $6 million in net assets.
So let's hope next year that the government brings that in line with these rule changes, so that's going to be $10 million.
Fingers crossed. And there's a huge focus on the cash economy, called black economy with the ATO. There's been an enormous amount of funding basically given to the ATO to crack down on this, including a very interesting piece where the ATO are going to target software suppliers to ensure that they're actually providing software that has audit trail facilities, which means you can't just go into your point of sale and delete a few actual sales. To reduce to reduce that cash.
So what about, is there anything else there for businesses?
Not really. There's one thing that's a little bit alarming, being the 457 visa debate that's been around for the last couple of weeks. It's actually a terrible thing to have to go through. We need workers in this country from everywhere because everyone brings a unique skill set. The 457 visa is obviously being abolished, and to make matters worse, the new visa standards that they're bringing in, businesses will need to pay an actual fee of $1,200 up front if they want to bring a foreign worker into the country. And that's for the temporary foreign workers, and it's $3,000 for those permanent workers as well.
I thought it was less red tape, if not more.
No, more red tape, definitely. So let's move on and talk about some of the changes to superannuation this year. What's happening in the super landscape?
So as we know from last year's budget summary, there was a whole host of changes that came through. Some of them are actually going to start being enacted on 1st of July this year, and some of them are in relation to, to now. One of the big things, which was actually a good thing I thought last night, was people that are looking to downsize their home. When their kids have left home, looking to downsize. If you've lived in that home for more than 10 years and you're over 65, if you sell that home, you can actually then contribute some of those proceeds into superannuation, which aren't included in those current superannuation caps, which I think is an amazing thing.
Certainly helpful for people who are over 65 and looking to maybe not have the 6-bedroom or 5-bedroom house, the empty nesters as we like to call
the
them.
holiday fund gets topped up.
So is there anything else changing for superannuation?
There's a few little tweaks for people that have a self-managed super fund who have over $1.6 million. There's going to be some tightening in the rules around that. However, most of those things have already been enacted and we're ready to go for 1st of July.
Which is excellent. Now, normally we get to talk about changes for individuals and changes for tax rates and things, but this year there literally has been next to nothing. I guess the first home owners superannuation scheme, let's discuss a little bit about that, because it was really one of the only things for individuals from a tax point of view. What's going to happen?
Okay, so a couple of years ago they had the first homeowners grant, and then that got abolished. And effectively last night it came back in again. So what that's allowing people to do is you can put up to $30,000 salary sacrifice into a superannuation style account, and that can be used to purchase your first home. So when you have that money ready to go to purchase your home, you can pull that back out at concessional tax rates.
So basically 15% tax, most people would be paying 30 cents to 47 cents in the dollar tax personally, so with their after-tax money. So they can basically contribute this from their pre-tax money into super. They can do a maximum of $15,000 per year and $30,000 total.
Right.
And then after 1 July 18 be able to pull that out, which is quite good. And I think the only other interesting thing for individuals was the increase in university fees, which will come in a couple of years and be grandfathered in, and the help repayment thresholds. So at the moment you don't repay your help debt till over $52,000. That's actually going to reduce down to $42,000. So people will need to be starting to repay that a lot earlier when they're in their working journey.
Yeah.
The good part about that is it's only 1% at $42,000, and then the sliding scale that's going up. So the next big set of changes were all to do with property. And a lot of people aren't necessarily talking about what these changes are. So there's no travel deductions at all if you go to inspect or maintain your property. So no more trips to the Gold Coast. Or any of those places to inspect your rental property, and even down to the fact that if you're going to help in some of the renovations and you'll be claiming your travel car costs, you no longer can do that at all. And that's from 1st of July 2017, so very soon. The other huge change is about depreciation. So if you have a rental property, chances are you've actually contacted MCG and got a depreciation schedule, which is fantastic for negative gearing. So what that allows you to do is they will go into the house and they will assess that there's a dishwasher and there's light fittings and there's carpeting and there's a whole host of things that have a value, have an effective life, that you can then depreciate over a number of years. Those rules have completely changed and those deductions are no longer available. So big change, because a lot of people could be claiming $8,000 to $12,000 worth of deductions every single year. So if you've got a new property, you'll still be able to do that because obviously you know the costs of those new properties. If you have to replace your dishwasher, you obviously have a receipt, you have the purchase date, you have the price. You'll be able to claim those things, but no longer will we be able to get those depreciation schedules done. It's going to make a huge impact on negative gearing for a lot of people. There's been a couple of changes to GST on residential properties in terms of who pays that GST. And there's been some good things for capital gains tax discounts for people doing affordable housing. So that's where you might have a low to moderate income earner who is actually renting the house at a discounted rate. Your capital gains tax discount goes from 50% to 60%. So that will affect a few people.
Good incentive.
And foreigners are definitely going to be paying a lot of tax. There's a $5,000 ghost tax if you're a non-Australian resident. Yes, the ooh, and you're not actually living in the property or tenanting the property. So this is referred to sometimes as kind of, the foreigners come in, they'll buy a property, they'll leave it for 2 or 3 years or more, and then it just sits there. And it's obviously driving up house prices. So the whole idea of that is they'll have to pay a tax.
You should use it.
Correct. And it might, hopefully, incentivise some people not to be buying as many properties, but you never know. And I think just a couple of things to note that we don't really have a lot of detail about at the moment, but we'll certainly be following the progress as these things are announced. There's money for state governments to reduce red tape for small businesses. This will be exciting.
Should be.
Because most of the time when governments reduce red tape, they don't. But the whole focus here is on the registration process for businesses from an incorporation point of view, and also from a process of their licenses, business names, all those things. So, one central body would be so amazing that you could just electronically submit everything. Fingers crossed for that one. There's a National Skills Fund that has $1.5 billion over the next 4 years.
That's huge.
And this is coming from the foreign workers tax, so the visa tax. This is going to be basically something that is aimed at apprentices and traineeships in industries and areas that really need a lot of support. There's some more regional and rural education scholarships available, and a $100 million advanced manufacturing growth fund, which will hopefully help some of those high-tech manufacturing businesses. I guess the big thing for this year, though, is really a recap on what's come into play now or what's about to come into play. So from a business standpoint, we have this magical 27.5 cents tax rate, which is great. And for individuals, the tax rate from the 1st of July 16, that 30% threshold increased to $87,000 from $80,000. So that's been very, very good. What's happened from a superannuation point of view?
Okay, for superannuation, starting the 1st of July, your concessional contribution caps come in. So we're back to $25,000, which means up until the 30th of June this year, you can put up to that $30,000. So you should take advantage of that in the next month and a half while you can. And then also the non-concessionals. So you can put up to $180,000 in, or $540,000 if you haven't pre-contributed in the last 2 years. That's reducing to $100,000 next year. And if you're one of those lucky few that have over 1.6 million in super, you won't actually be able to make any non-concessional contributions at all. So all those things are happening in the next month and a half. So it's big changes that are talked about previously are now law and are going to be in action.
Definitely. So there's a nice little action list of things that we need to be ensuring we're taking care of now and planning for what's about to come in from the 1st of July as well. So that's a wrap on our federal budget summary. We'll certainly be spending a lot of fun times over the next few weeks for all of our GrowthWise clients looking at your tax planning and making sure you have your action list to get that tax down as much as possible in a smart way, and certainly be planning for what's happening next year. If you've got any questions, you should definitely post your comments below on our Facebook page or give any one of the team a buzz.